G'day folks, as the stock market rally backs, I wanted to give you full clerical insight into the Illuminati per se that are actually controlling these market movements, because me and you, we're bottom feeders. We're like those things that hang on the bottom of sharks, but when you can kind of come to the reality of what you're swimming in and how to swim with the big boys, you're going to end up doing very well, as some of these techniques I've implemented over the last several years have led me to outperforming Berkshire Hathaway, the likes of Cathie Wood's ARK Innovation ETF, and it's all because I realized the market is pure fugazi at this point, and I'm going to explain to you why that is, because it comes down to who's moving the money, who has control of all the money, our money, where is it going, how does it operate in these markets. So first and foremost, we're going to be looking at two major funds and really kind of offer you an insight into how big these companies truly are. So first and foremost, BlackRock. BlackRock is managing, and again, this is assets under management right now, $9.57 trillion as of Q1 2022. Second in line here, we're going to be talking about Vanguard. Assets under management as of 2021, $7.3 trillion. Combined, these two management companies are controlling just under $17 trillion. And obviously, this isn't really taking into consideration the current volatility and drops in the market. But to put this in perspective, coming into 2021, or the end of 2021 into 2022, the US total market value was sitting at a whopping $53.3 trillion. The S&P 500 alone at the beginning of the year here, guys, was sitting at about 42.3 trillion. Like, these are astronomical numbers to wrap your head around, but bear with me here because I'm going to tell you how you're going to bottom feed your way to the top utilizing this information. Because to put that in perspective, those two companies are managing, again, about 17 trillion against the total market cap to value of the US equity market. That means that they're managing about 32% of the entire market, which is crazy. And that's not all their money. It's investment money that people put into these ETFs. And we're going to talk about those ETFs in a second here. But take a look at this, guys, because Robinhood is probably the best representation of people like me and you. Even though a lot of people in Robinhood accounts can purchase a lot of Vanguard and BlackRock ETFs, and a lot of people do, I feel like most of the Robinhood investors over the last couple of years were the ones buying your GME, your diamond handing, Bitcoin kind of investments. So it probably better represents me and you. But under management as of 2021, they were about $98 billion, which is a huge, not to shy away from, but it is still bottom feeding into the comparable scope of these large cap fund managers, right? So let's just talk about what these companies do from a top down level, because a lot of their primary ETFs where money's being shifted around is in things like iShares Core S&P 500 ETF, so IVV from BlackRock. And taking a look at the current holdings in this, guys, again, you're going to notice these companies like Apple, Microsoft, Amazon, Tesla, Alphabet, these are all the largest weightings. Same thing with something like VOO, the Vanguard S&P 500 index, largest weightings: Apple, Microsoft, Amazon, Google, Tesla, Berkshire. United Health has really worked its way up here, J&J, Nvidia, things like that. We've got the total market index VTI and variations of this. I'm sure you'll see many different tickers from many different YouTubers, but all fall within the same bucket of stocks from the same fund managers with Apple, Microsoft, Amazon, Google, Tesla, Alphabet, United Health again, Johnson & Johnson, and then a lot of people that are a little bit more aggressive, sticking to those tech-heavy top-weighted companies will really shift into things like Invesco's QQQ ETF, and Invesco is another huge fund managing company. But again, Apple, Microsoft, Amazon, Tesla, Alphabet, this is where all your money is funneling into. And this is where the large scope of new money, as people begin to buy broad-based index funds, is continuing to funnel into. Now, when you understand this, you realize why value investing really starts to make less and less sense, because these companies that have been overvalued for a very long time, things like Amazon, Tesla, Nvidia, these companies trade at premium and do not attract the likes of Buffett or any value investor. But the fact that they have to understand is because of where they sit, all of that money continues to funnel in there, which gives them this grace period to allow their bottom line fundamentals to catch up. But that doesn't mean it's guaranteed. You got to be careful if you're picking these individual top weightings, because you might end up with a Facebook. And if one of these companies goes out of favor and a lot of fund managers start selling it off, you end up losing market cap weighting, devaluing it from the top 10 list, again, as we've seen with Metastock here, which means we're going to watch hundreds of billions of value get wiped out, which is exactly what we've seen. And that wasn't caused by me me or you. So even though I think Facebook is an incredible buying opportunity here, the fact of the matter is they have an uphill battle now to get back into the social preferences and being able to reweight larger amounts of capital from ETFs. But this is going to be a challenge. Now, the other thing is a lot of people want to get fancy with this stuff, right? They think they can leverage into triple leveraged ETFs. They're going to talk about covered call ETFs, but that's all us just bottom feeding off the large cap players. And there's nothing wrong with these kind of investments. It's just important to recognize that they're all part of the same perspective, right? So how do we make a huge amount of money like I have in the past? Well, if you can recognize that these companies are run by social governance rules, when we're talking about ESG and obviously carbon emitting policies, you can start finding smaller cap based companies that can have an upward trajectory toward these fund managers, which is where I've seen my largest returns with companies like Tesla, like Apple that I was buying years ago. I mean, Tesla was an investment I made in 2019. A lot of people battering it, but it was revolutionizing the auto industry and meeting a lot of ESG tech lists, which kind of gave it a clear path and a clear social governance path to really pay the way into a huge amount of return. And I think a lot of people refuse to recognize this because they're too caught up in values of companies where they don't take into perspective that the future growth potential is all fugazi. We have no idea the growth rates and what the next 10 years is going to look like for Tesla. So because we can build that into our imagination, it really allows more simplicity and a seamless way of people adding money to it. It kind of breaks the barrier down of concern. Whereas companies that have these concerns that were huge mistakes in my portfolio, but luckily, because I understand my risk tolerance and leveraging into investments, I didn't take huge losses, but I mean, I took a 50% haircut on things like GEO Group. That the value investor mindset that I had was this thing is cheap. People do not recognize this. Prisons have huge moats. They're not going anywhere. Crime is still prevalent. But the fact of the matter is these things will never get picked up by large funds. They do not meet social governance rules and all that stuff. So they have been literally beaten into the ground, being sold off. And I find it funny when someone kind of spiels these stocks to me. And I was on a Netflix special because of this investment when I was talking about it. Made me look terrible, but it is what it is, folks. So I took my 50% haircut. I realized the mistake there and I got out of it. And I've also realized this with stocks that people love from the dividend investing community, like, of course, Altria Group, right? Like, these tobacco giants will never meet social governance rules and they will never be picked up and see the same kind of growth rate potentials that they've had in the past. Even though they're massive conglomerate based companies, we can really see the steam has started to die down basically from 2015, 2017 onwards. Again, when all of these new rules and ESG implementations came into play. I mean, it's a very fascinating thing to take into perspective when you're talking about philosophy and investment strategy, right? Now, obviously, this is large cap based, but even looking at small cap based companies like the ARK Innovation ETF, you need to pay attention to these guys with your. So basically, when you buy a stock, you need to tell yourself, where is this stock vastly held? Who controls most of the market cap in this company? Because ARK Innovation was really playing in a lot of the small cap growth sectors with things like Zoom, Roku, and all those companies. And as this entire market shifted to a risk-off environment, it caused a self-fulfilled prophecy because as funds fled out of ARK, it's forced to sell out of those positions, and that freaks the individual holders out, which might force them to sell or take downside risk and start shorting. I mean, it kind of just perpetuates itself, and you need to understand this when you're picking individual stocks because there is no one strategy that works in this environment when we're talking about growth investing, penny stock trading, I mean, value investing. It doesn't take into consideration how these whales are moving those investments aside from the valuations that exist within those companies. Now, if you can get a stock that checks all those lists and has a good value, I mean, it's a rarity because, again, you couldn't say that about Tesla in 2019, and look at how much it grew into the future because value investors just couldn't wrap their head around those metrics, not taking into consideration everything we've talked about here. And now that we're living in an environment, guys, where a lot of people are shifting capital into risk-off investments because GICs and bonds are yielding anywhere from 4 to 8%, that also causes a leveling in the market because as fund managers start recognizing the risk in some of these larger cap stocks, they might see it as overvalued. They might look at ARK Innovation and say, hey, we can't be holding this in this environment anymore. They're shifting that capital over into those investments, which is why we've seen such a large rally in the dollar, right? Because as global managers and individuals recognize the value of government-backed debt that's guaranteed returned, you can see that the US dollar, just within this shifting of the market, has rallied very, very aggressively on that. And again, this causes a healthy balancing across the entire market. We're seeing valuations get more adjusted. And again, this is very good, but this is the large game here, right? And if this is a conversation you guys want to continue discussing with me, if you want to talk about corporate investing, my Canadian tax advantaged accounts, we can have a one-on-one talk at therichgang.com. It's just a simple website where I'm just offering one-on-one chats. And then you can also link into some of my member chat groups where we can kind of just continue talking moving forward. But this is just to support the channel. If these are conversations that interest you and you want to take it a little bit farther, a little bit deeper, and support me on my journey as well. And also check out my monthly portfolio updates. I do full breakdowns here, but you can also come back to this channel and just check all this stuff out for free. All of this stuff, guys, is just to help you out and also continue to framework where I'm going into the future. So at this point, I want to pass the question off to you. I'd love to know what you guys think about this in that comment section below. But stay cool, stay awesome, and as always, I look forward to catching you in the next one.